Hello and welcome to another update video about the S&P 500. In the last video we talked about this sort of inverse head and shoulders, which seems to be playing out now. We had a breakout in the last few days, and also we had here a 1-2 setup with now potentially a wave 3 of 3 being to be in the making. This will be now highly interesting, especially as we are now on our way to the $4,200 level, which is an important resistance level and has been over the last few months and the last year. However, we have to cross a few more resistances until we get there. For example, here the $4,090 level, we just got rejected there, got a bit of a zone of resistance. That will be the next level that we need to break above after we broke this ascending trend line of this possible, well, you could call it a channel or just an ascending trend line, which the price was hovering below, but now we had the breakout. So the resistance area is basically here, I would say between 4,090 and 4,110. I'll make that red just to highlight resistance. And that will be the next task. And can you see on the chart now this massive inverse head and shoulders pattern? It's not super well defined, but it's I think it's good enough. And yeah, we are following the count at the moment. Next task for the bulls needs to be to break above that level and then to reach the $4,200 level. We had another possible setup here. Had we had a deeper wave 2 pullback. That is, in the last video we didn't know that. So the idea was we moved up here in a wave 1, basically in a diagonal wave 1. The idea was, was this just an A wave? We would come up in a B wave and then break down in a C wave. In this case, this could have been another long entry point, or the other possibility to break through straight away. And then obviously there was no trade setup, so we can delete that box. But it's still following the overall count of an uptrend, yeah, which we are seeing at the moment. Target for the third wave here in the circle, wave 3, in the circle wave 3, target would be the 1.618 extension. So we're taking the length of the wave 1, we go to the low of the wave 2, and to be really a wave 3, we needed to reach the 1.618 extension as a minimum. That's sort of just above the $4,200 level. I mean, again, here it's not one price, it's a bit of a range. But it would need to reach that, maybe just with a wick, to confirm that this actually is a third wave. Afterwards, we would get a wave 4 and then a wave 5 of 3. Because of the wave 1-2 setup here beforehand, this 5-wave move in the circles would only complete a third wave. We would then move down in a fourth and come up in even another fifth wave. So it's not an overall super convincing count, unfortunately, because also here the wave 1, which occurred between October and December, was only a diagonal pattern, yeah. So again here 1, 2, 3, 4, 5 in a diagonal, not great. Then an A wave, an overshooting B wave, and the C wave down. We hit our support area here, we hit our support area here. It's time to move up stop losses if anybody entered in these areas. But yeah, I mean, because obviously it could still be a bearish count, yeah, especially if this move up here, because this move up was just corrective. So in a bullish interpretation, it's a diagonal, but you could also easily count it, for example, as a WXY pattern. Absolutely possible. Or here the W wave, then the X wave down, and now a Y wave to the upside. Or probably you could even, haven't looked into it too much, could construct all of this as an A wave, the B wave, and the C wave to the upside. So until we really get 5 waves on a relevant time frame, we can't really say if we're already in the bull run. But of course, it's the same story as Bitcoin, because the problem is this is only a diagonal. Yeah. If it was an impulse, it would increase the probabilities that we are in a proper breakout. But also here, this was also only a diagonal pattern. You can just see that, basically an ascending wedge here. Too many overlaps, yeah, and messy price action overall, yeah. And we've got that here as well. Here's even worse, actually. So it's not clearly impulsive. Also, this move up was not clearly impulsive. So we have diagonal after diagonal. Markets tend to do that in a wave one. It's not a problem, but it just reduces the credibility of the count a little bit. And so here we need to be a bit patient, but the next targets should be clear. I think we can focus now on higher as long as this last wave 2 low is holding, which is at $3,960 Ideally, the S&P 500 now even holds above the 78.6% retrace, which would be the $3,996 level. So whatever it does, ideally it stays above that level. A drop below that level would not invalidate this setup. It would really only invalidate it if we really drop below that $3,965 level. However, it will already get very unlikely below the 78.6 retrace. So it's all looking good at the moment. Seems we have some temporary upside. Bearish scenario should be clear as well, as I said. And if we break below this wave 2 low, then we have a bit of a problem here. Then it could turn down and would definitely decrease the probability of further breakouts. Therefore, I would say, if you're trading this and you entered in one of my support areas, it's time to move up the stop loss, move it either into break even or take some partial profits and set it below one of the recent lows, depending on how much risk you want to take. But for now, I think we can be focused on higher. And let's see how the next week goes. Obviously, we've got the Fed interest rate decision, so that could shake up markets a little bit. We could see some distorted waves. Waves could go to their extremes, things like that. On a day like that, on the 1st of February, we'll have the interest rate decision. Looking forward to that. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.